matter. It's really
Okay.
your preference, really. So
Okay. Maybe me closer or something.
So Brad, we're going to be starting here in about 8 minutes,
Okay.
and we will essentially just I'm going to kick things off, talk a little bit about what's been happening over the last week, sort of do a quick rundown for about 5 minutes or so.
Yep.
We'll make sure to give you a quick introduction. You can say a few words during those first 5 minutes. And then I will sort of jump back in, talk about a few metrics for about 10 to 15, along with Dino. And then we're thinking right around the 20 to 25-minute mark, we will essentially give you the reins and say, Brad has been modding the altcoin subreddit now for what, 1 or 2 months now?
No, it's been like 2-3 weeks.
2-3 weeks, so still really fresh. Okay, so we'll say 2-3 weeks. Brad's been modding this subreddit. He's seen lots and lots of interesting posts. Hey Brad, what kinds of interesting factoids and topics are you seeing rising to the top as of late? And you can sort of just take the reins for about 5 to 10 minutes. Myself and Dino can jump in if you want and ask a few follow-ups and just ensure it's going smoothly for you. And other than that, you can kind of share what you're seeing. If it's data based, that's kind of a bonus. But whatever you think is an interesting topic for our community to hear, the floor is going to be yours.
Okay, cool. Yeah, altcoin was like shut down for like a year and a half or whatever. So there was no way to post to it, and like I was able to snatch it up. So let me just close my door here 1 second.
Yeah, I'll do that in just a sec. Hey, Dino, I was going to share exchange supply today.
For Bitcoin?
What is happening, guys? Welcome to another edition of This Week in Crypto. We're very excited to jump into many of the wide array of metrics, charts, leading indications, and all sorts of fun things on this call to discuss what's been happening on the Santiment platform, to give a little bit of an indication as to what's been happening in the markets, why things have gone the way they've gone, where we see it going in the next week based on historical data. And we'll dive into as many questions of yours, as always, as we possibly can. We're also excited to announce that we have a special guest with us today, Brad from r/altcoin. We'll jump into a short segment with him here in about 5 minutes or so, potentially around the 20-minute mark, actually. So we'll give a little bit of time to go over the markets, and then we'll give him a nice warm introduction and talk about some of the things he's been seeing on his subreddit that was recently relaunched after taking, I think, about a year off and coming back in about just about 2 to 3 weeks ago. So it's a very exciting time to finally have one of the major cryptocurrency subreddits back online. For now, I want to remind everyone that everything we'll be showing here on the call is not considered investment advice. We are here to show objective data-backed evidence as to why things are going the way they are and what is in store based on what we've seen based on historical patterns in the past. So keep that in mind. And all of that being said, we're going to jump right into what we usually jump into first on our call, which is our Santiment screener here, which you can find easily by going to our header, going to screener, and clicking one of our public or your own private screeners up here, which will bring up everything you're seeing here with the infographics, price tree map, and price bar chart are on. Remember that you also have a filter at your disposal where you can essentially go to any sort of metrics that you have access to, whether you have a free or a pro version, select the criteria, and you can instantly filter exactly what you'd like to look at. As we can see here, we're just looking at the top 100 or so crypto assets and how they have fluctuated over the last 7 days. As you probably have noticed, if you've been tracking the markets, most assets continue to go up. We've got Bitcoin, Ethereum basically being flat. This is the first week in about 4 weeks that I've actually seen Bitcoin move down on one of these calls, but it's been ever so slight, dropping about 1.8%. Ethereum, on the other hand, is at about plus 3.7%. And then, of course, XRP has been the big story as far as top caps go, jumping up 72%. Many for months and months have really expected XRP to drop off a cliff with the SEC news. Some of that news has been a bit alleviated as of late with some SEC lawsuit news kind of easing off the gas a bit. And I think that has been a major factor as to what's been fueling the rebound for XRP. We'll briefly jump into a few metrics about it here in a moment. But before we do, I'll round off some of the other notable projects that we've seen. We've had Solana jump up for about a 50% gain. BitTorrent has been a big trending topic for many. They've really launched, especially in the early half of the week, and are up about 57% now. Engine, 52%, excuse me. Thorchain here, which is one of our top 10 DeFi developing assets of the month, which we'll touch on during the call. They're up 45%, Stacks 55%. Bitcoin Gold has almost tripled at plus 170%. So of the top 100, they were the largest gainer. And KuCoin token to round things off as another notable token. But as you can see, there were several major gains in the last week as the altcoin markets continue to churn here, which is why it's a great time for us to have Brad on, and we'll get his thoughts on some of these tokens here soon. So I also want to touch on our NVT model. For those of you unfamiliar, this is measuring the amount of token circulation that an asset is getting at any given time compared to its market cap at that time to give a ratio where the lower it is, the better, based on trend lines where we adjust things over time so that NVT can actually rise slightly and still be considered bullish and bearish based on rising supply for any asset. So here, of course, we're looking at Bitcoin. We can see over time, the greens generally indicate a strong likelihood of a rise, while reds indicate a strong likelihood of a drop or a lack of health in terms of the amount of unique tokens being moved around on the Bitcoin network compared to that market cap at the time. So very clearly, we can see these red moments here were validated with falls. We see the green moments here were validated with rises. Once it goes red again, you can tell things are dropping. This is a pretty accurate model, guys. And I really recommend, if you have a Sandbase Pro account, you use it for a long-term snapshot of what's happening at any given time in the market. It's not just for Bitcoin, but many of your favorite assets. So lately, you can see here, as of October 2020, we were seeing plenty of green that was saying that we were getting a massive amount of token circulation compared to where market cap was. And even as the market cap was rising, token circulation was sustaining that high level, which is why we had 5 straight months of green here. We really started to top off, I would say, or at least slow down around late February, when we had that all-time high in mid-February. We got a new all-time high in March by just a smidge. And ever since March, we've been in red territory, indicating we're not quite getting enough token circulation compared to the norm. This by no means is an indication that we're about to fall off a cliff and drop back, but it does mean that we're seeing a bearish divergence based on token circulation that we need to look out for right now. And we are, having basically the most bearish month that we've had since July 2020. And it's a bit of a concern right now. I wouldn't call this, time to, put up the alarm and really run for the hills and sell your bags or anything. It's just something that I want to note right now, because this model has been historically quite accurate, especially with sustained consecutive red months. If we start seeing a third one going into May, it's something to look out for. And I just want everyone to keep this in mind right now.
Yeah, so actually, Brian, if you go to Sandbase and if you look at the 90-day circulation for Bitcoin, you can see this happening in real time. I wrote about this last week in our weekly pro report. So go to, I think you can type in circulation 90-day and it should show up there.
We got 60. Is 60 okay? It doesn't look like 90 is showing up. I can type in the whole thing.
Yeah. There we go. All right, so that's the chart. Basically, what this chart shows is the amount of unique Bitcoin that are being transacted on the blockchain on a daily basis. So what you're seeing, and Brian, you can also zoom out to maybe last 6 months or last year, just so we give, okay, that's already 6 months. Let's take the last year. There we go. I think that also gives a little bit more context to where we are at the moment. So essentially what we're seeing here is there's been a massive upsurge in the unique tokens, Bitcoin tokens unit of BTC being transacted throughout the rally. And the total amount of unique Bitcoin that have been moving on the blockchain over the previous 90 days is currently in a decline. And it really has been in a decline since the all-time high. So what this, at least to me, suggests is that there is there are early signs that the redistribution that's been going on from like weak hands and Bitcoin bears to institutional investors and long-term bulls is sort of starting to slow down a bit. And a lot of people that have kind of taken advantage of the rally and bought into BTC in January and February now are sort of starting to moving back to hodling for the time being. So this is something that's to be expected. I think, this January and February rally was basically historical, and it's completely understandable that you would see pretty much not the all-time high, but like a 3-year high in terms of the amount of unique Bitcoin being transacted on the blockchain. Now the hype is dying down a bit, and the amount of speculative juices on the Bitcoin blockchain are slowing down. So it's not surprising to see NVT, which basically uses this particular metric, so the amount of unique Bitcoin being transacted on the blockchain, it's not surprising to see NVT going red. I just think it should be sort of put into the proper context, which is, we've had a historical rally. A lot of people were moving into BTC for the first time. There was definitely sort of a major redistribution event from a reallocation away from like paper hands, people that sold at 30, 40, 50K into institutional investors and large holders. We have seen the balance of large Bitcoin addresses continue to rise throughout the rally. And now they're kind of just chilling for the time being. They don't really have, I think, interest into moving their bags for the time being. I think these are like long-term investors that are long-term bullish on BTC, and that's one of the reasons why we're probably seeing this decline in general sort of circulation on the Bitcoin network for the time being.
Yeah, it's fair to say that people are at minimum a bit hesitant right now. They're a bit gun shy about making big moves because they aren't sure whether we're seeing a repeat of January 2018 right now, where we had that big 19.8K all-time high that was very historic at that time. And right now, it just seems as though people are waiting for the market to get out of this range that it's been seeing in the 50 to 60K range, essentially. And once we break one way or another, I would expect the token circulation picks back up again as people react to it. But for now, it's very clear looking at this chart, and I'm glad you picked 90 days, that it has a very good track record in terms of leading, in terms of actually rising before the price rises and falling before the price falls. We've seen several pieces of evidence of that over time, not just over the past year, but since this metric existed for Bitcoin. And I really find it to be a fascinating chart that we're looking at, especially considering we really had this drop off occur on March 11th. The all-time high occurred on March 13th-ish. Yeah, March 13th, definitely right here. And then we just had this huge drop off ever since. And the price is still staying sustained. But if we continue to see a token circulation drop, it's quite likely that we're going to see a price drop. So it's a good chart to keep an eye on, guys.
So that's an indication of people moving out of BTC as well as holding, right?
Oh yeah, especially with altcoins churning along the way they have been. People want to get into the assets that are making the most money, and generally the markets will eventually be hurt if too many people decide they want to be in altcoins as opposed to the king, the number one asset that really makes markets move up and down. So it's something to keep an eye on, considering how familiar this cycle is, where Bitcoin tends to pump, altcoins then to pump, then traders tend to look at altcoins and go, these look a lot more enticing. I'm going to go here. And then Bitcoin ends up correcting and people go back into Bitcoin as altcoins drop much further than Bitcoin does. So it's a tale as old as time, as they say.
Yeah.
But that doesn't mean we're at the end of that cycle yet, and we can't guarantee any of that. We just have to note what we're seeing here with the drop in circulation for now.
Right, and that's why you can also use our mean dollar invested age chart as sort of a complementary metric for when looking at sort of where we are in the cycle. So mean dollar invested age is a metric that also tries to kind of capture these large redistribution cycles for Bitcoin. Yeah, if you look at the last basically 5 years for mean dollar invested age for Bitcoin in particular, what you're going to see is that pretty much every rally so far has coincided with these major drop-offs in Bitcoin's mean dollar invested age. In very simply put, what this metric does is it tracks the average age of all of the Bitcoin that are moving on the blockchain, adjusted for the acquisition cost of those Bitcoin. So the rising slope of mean dollar invested age means that the coins are on average are not being moved. It basically points to a sort of larger accumulation period in Bitcoin's life cycle, right? So, but Brian, Brian is showing here last 5 years of data, and then pretty much these drop-offs or valleys in Bitcoin's mean dollar invested age suggest periods of redistribution and allocation from one group of users to another. So in 2018, that was sort of early Bitcoin enthusiasts to reallocating to a first wave of mainstream investors. And so basically both in 2018, 2019, also in 2016, and now we have seen these massive drop-offs in Bitcoin's mean dollar investor rate, suggesting that, there's sort of a new wave of interest in the coin. And as long as sort of we are seeing this interest continue, basically by tracking the declining slope of mean dollar investor rate, we should be good to go. Pretty much every large Bitcoin bullish cycle so far has coincided, or the end of every Bitcoin's bull cycle so far has coincided with the bottom of mean dollar investor age drop, basically suggesting that the redistribution has stopped. In general, sort of demand for BTC has died down for the time being. So once we see this slope start moving back into the positive, or going back on the incline, suggesting that people are moving back into hodling, and in general, sort of the interest towards BTC and speculative and buy side pressure for BTC is starting to be exhausted for the in the short term, we might see a beginning of a bearish cycle once again, if history is to judge. But for the time being, mean dollar investor age continues to drop, so redistribution is still going on. People are very much still sort of interested in getting into the largest coin in the world. So all good as far as sort of macro indicators are concerned.
Yeah, I think that both Bitcoin and Ethereum are staying on a very close pattern to one another right now. And for the last week, we've been kind of flat here. But for the most part, what Dino's saying here with this huge drop, it's generally a great sign. It means the dormant funds and the amount of dollars invested in those tokens, being Bitcoin and Ethereum, continue to move around. And that's what will really churn the price of the two leading coins here. So we're going to have to see if things, start to taper off and stay flat or rise slightly. Or if we, this is kind of just a hiccup and we see things continue to drop, which would be a great indication that we can rise much further than, 58K or 2100, like we're seeing now for Bitcoin and Ethereum, respectively. Okay, one other thing before I hand this off to Brad for a few minutes. Here's the BitMEX perpetual contract funding rate, which is a reflection of the ratio between longs and shorts on BitMEX. Of course, this is one of many funding rates, and we only have, data for Bitcoin or BitMEX at the moment, but we'll have other exchanges in the future. But what we're looking at right now is essentially how high or how low the funding rate is at any given time. When it's high, that means longs are paying shorts, and there's a bit of a reflection of greed going on. When it is low here, as you see in a few instances down here, that means that shorts are actually paying longs. And that's typically a great time to buy because it means there's a tremendous amount of FUD going on. Right now, though, it's sitting at about neutral territory. You'll notice in the past week, we had this huge spike here, this tan spike. And what this was telling us is that we were getting overheated and there were a lot of people trying to leverage long to hopefully ride the price up to 60,000, and that didn't actually come to fruition. Instead, we had a big drop off, which is very often the case when we see these big spikes. You'll very often see that correspond with an upcoming local top. And when things go dormant again, like here, that's when you'll see things have the tendency to rise or at least not fall like they would be during these spikes. I'll disable Bitcoin really quick and only show Ethereum now. We change the price to Ethereum as well. So this is Ethereum's price. You can see a similar pattern. When you have these huge pink purple spikes here, it's generally indicative of an upcoming local top, meaning people are longing in too high of numbers. And then when things start to go down, that's when you see these big price rises. Obviously, things have been quite down compared to what they looked like in the first 3 months of the year over the last week here. So with things not really going past 0.15%, as you can see up at this legend here, not really going past 0.15% very often until it got here, that's when the price was really starting to surge and got up to 2,000, 2,100 and hit its recent all-time high. And then when we saw these spikes, that's when you had these big drop-offs. Now it's coming back down again, which is a good sign. Ethereum doesn't quite go all the way to dormant as often as Bitcoin does. So you can consider something like 0.07 to 0.10% actually a pretty favorable BitMEX perpetual funding rate according to history. So we're in a better spot than average for both Bitcoin and Ethereum right now. But keep a close eye on these charts for Bitcoin and Ethereum because they can change on a dime. And if you see these big spikes, which you can even set alerts for and have it get sent straight to your phone via email or via Telegram, and be told right away when these spikes are about to occur and be prepared for that.
Yeah, I think derivatives or funding rate is probably one of the big reasons why we had this latest correction. It's just overzealous, over-leveraged longs ruining the party for everyone in the short term. Basically, the cost of running a long on most high-volume exchanges was extremely high, providing a lot of incentive for shorters to squeeze out the longs, liquidate them, and take profits. So that's why, I mean, if we have time, there's a bunch of different signals that I saw for Ethereum in the past couple of days, which really suggest that we are sort of in the overvalued territory and we might see a short-term correction. Obviously, it happened. Ethereum went below 2K for a minute, but I wasn't really too surprised nor too concerned, simply because I think once all of these metrics begin to normalize, which they did over the last sort of 24 to 48 hours, we might see, another sort of price bounce back. So we can get into Ethereum a bit more if people are interested in, there was a number of like yellow to red flags before the correction that we saw in our data that we can get into if people want to hear more about it.
Yeah, why don't you guys give a quick comment in the chat if you'd like to see a little more about Ethereum toward the end of the call. And we'll be happy to do so. We don't necessarily have to go for, the smaller market cap, more obscure projects all the time. Sometimes people just want to see an expanded look at Ethereum and some of the top caps. But for now, I would like to bring Brad on if he's there, and we can talk a little bit together. And he can give a little synopsis of what he's been seeing on the altcoin subreddit right now.
Yeah, so thanks, guys. I appreciate it. So yeah, altcoin, it was closed down for about a year and a half. The previous moderator team decided to shut it down. They thought it was kind of redundant to cryptocurrency, and the shills and spammers were like, they said it about 65% of what got posted. So I think they just got tired of it. And but altcoin was one of the original subreddits. They started in 2013, and for those of us that were around back then, we remember it pretty fondly, so it seemed like a shame to have it completely shuttered. So yeah, I managed to scoop it up and open it back up, and it's been a lot of spam again. Like there's just especially now with the the pancake swap and all of these things. There's just a million ways for the spammers to get their scam running, right? So yeah, we're looking through ways to basically. I kind of removed all of the spam checks and stuff just to see what it would look like and see how bad it was. And literally immediately, I posted a sticky thread just asking for what should go in the sidebar, and I think like 12 out of 12 comments were spam bots. You know what I mean? Like literally within the first day, just talking about random unrelated stuff. So yeah, there's I assume we're still on a lot of spam bot lists.
How are you guys handling all of that right now? Are you doing your best to kind of clean it up?
Basically, what I'm trying to do is implement sort of a overarching rules, so I don't have to be in there manually fixing everything all day. So I'm trying to look at ways we can sort of programmatically remove stuff. So
Auto
the two sort of
and all that.
Yeah, the two ideas is to do it completely manually, where we sort of like look at every post before we approve it. I'm not really like huge into that. It's a lot of like work to look into each one of these scam coins to see if they're actually a scam or not, because there was a lot of projects. I mean, think about it, when the market was dead there for a couple of years, there was projects that were worth 85K that are now worth $1 billion, right? So if they'd come there at that time, and I could have been like 85K, like what is this, right? But those could be the real projects, and so that's sort of like the magic of the altcoin space, and so I don't want to ruin that. But yeah, we're thinking about maybe just putting like you have to be on CMC or CoinGecko, I think, as sort of a barrier to entry, the minimum barrier to entry, and maybe have like an overflow thread every week to where you can just spam away. So if you want to put your absolute nonsense, just put it in there, and people that don't follow the rules are probably bots, and so we'll just ban them and see how it goes.
Yeah, well, I've visited there a few times over the past few weeks, and I think you guys are doing an excellent job. And when you weave through some of those spam posts, there are some nice gems in there that have really been fascinating. And if you'd like to cover a few of them, I can sort of go along with you and show the price charts and a few simple metrics about about the assets that you want to bring up.
Sure. So one thing that we've been doing is this daily altcoin thread. So basically I haven't done it for a couple of days, but every day that I do it, I will go out. I just go to CoinGecko. I sort of like look in the top sort of 500 and try to find something interesting with the following. So we could maybe go through a couple of the ones that I've picked so far.
You bet.
The first one, I guess we briefly discussed before, was Nano. You said that it's not an ERC20, so there's not really maybe tons of data about it in your system. But yeah, I picked them first just randomly, and it turns out they're a heavily marketing type community. People told me right away that they're often shilling their stuff. But yeah, it was an interesting coin. I thought they just recently went through a huge spam attack where my understanding of it is somebody bought literally, I think, a single nano and then divided it in two and kept trading it back and forth between two accounts really rapidly.
Wash trading, yeah.
Yeah, and so it really affected their network. So I was curious to see if you guys saw any of that, at least in your social data. Where that might
we do see
up.
a mild spike here right at the turn of the month if it was about a week and a half ago. If it was more recent, then I don't see anything here in the volume or social
volume. No, it was
volume.
at least that long ago. March 11th, I'm seeing news here.
March 11th. I do see a big spike. I see a big spike in social volume. So there was a lot of discussion right around March 11th.
Yeah.
But as far as trading volume, nothing crazy.
And the price dropped pretty dramatically.
Yeah, big time.
Yeah, and continued to go down and then recovered. So I guess they had dealt with it.
All the way down to 424 and is now back up at 580.
Yeah. It seems to me that's like a very common thing in crypto. Like it seems like bad news is great news, right? Anytime there's bad news, like buy. Like for sure. Over and over, we've seen it. I don't know. Has there been a case where bad news hasn't turned good? I mean, look how bad the Ripple thing looked like, and then boom, right back up, right? As soon as they, get their problem sorted, it seems.
Yeah, I mean, very often bad news in crypto is more of a long-term type of impact. There's sometimes bad news can be an opportunity for many, and it means that there's a lot more shorting, a lot more overall token circulation as the token becomes polarized, and some people love it more, some people hate it. And very often, because of that increased spotlight on it, there's a short-term gain from it because of the fact that there's just an overall higher level of trading going on. But in the long term, if there are less buyers, there's eventually going to be a downturn. So if that's the consensus with Nano, we'll eventually see that it's going to be kind of a slide for them compared to the rest of the altcoin markets.
Yeah, I mean, as long as the fundamentals are good for the coin, bad news can be great for traders. This is what we've seen with Ripple, with XRP. There was a lot of signs. So once the SEC news came out, there were a lot of signs on chain that people were kind of flooding out of the coin. There were massive movements of XRP to exchanges, people seemingly taking major profits. However, the fundamentals didn't change. Like the sort of overall value being transacted on the XRP blockchain was the same. The total amount of addresses interacting with XRP have remained pretty much the same. All of the sort of day-to-day activity of the XRP blockchain was not really affected by the news. It was mostly just people flooding out while the network just went on like it did in the days before, right? So it was very clearly a period where the coin got oversold, and pretty much like what 5 or 6 days later, it had another sort of 40% uptick. So yeah, definitely agree. Like the same with coronavirus dump, right? There was a lot of fun. We had one of the biggest sort of drops in Bitcoin's history, but very shortly afterward, people just got their profits back and then some. So,
yep. Another one we looked at was Request Network, REQ. We look at that one, which I think is really cool. I mean, I'm really bullish, I guess, on Maker. I think that they have a super professional team, and they use Request Network to handle all of their invoicing and payments. And so I figured that's a huge signal from a really professional project. Like if Maker's willing to, put payments, through Request, then I think that's a really good, nod to them, right?
Mm-hmm. Yeah, it looks like volume has been kind of dormant since its big spike about 3 weeks ago in March, around March 18th. But prices staying pretty high. It hasn't really shown a ton of fluctuation right now. It looks like it got to a low of about 11.7 cents 2 to 3 weeks ago and is now at 15.7 cents. So clearly staying pretty sustained, in this 1 month price chart looks quite good.
And the massive white spike there, that's volume. That was just
yeah.
Okay.
There's a good chance this could have been an outlier, don't you think, Dino?
Yeah, probably. It could be an aggregation error by the system, because we take volume from a number of different exchanges. So it could be part of the sort of exchange-based manipulation. Definitely, what isn't something that's going to happen often. It was sort of a black swan event.
Yeah, but you can at the very minimum say that this big hill right here with multiple instances of a very notable rise were accurate, regardless of this tiny little white spike.
It's interesting. And what's the blue spikes at the bottom?
So the blue spikes is social volume. That's the amount of actual, it's the amount of actual mentions that are being tallied by our system by scouring the internet between Discord, Twitter, Reddit, Telegram, and pro traders chats.
So that's interesting. During the big spike, right before the massive white spike, that could be an error. It looks like there was like sort of a quiet period. So like right before that big white line, to the right of where you are, there, like in that little section, seems like there's sort of like a drop up of social activity while it's going up. I wonder if that's indicative of anything.
It's hard to say.
You'd expect like it to be more like the middle of the graph here, where there'd be sort of like a big spike, and so I wonder if people are keeping quiet about it for some reason during.
Yeah, I mean, crowd discovery is just an interesting thing. If an altcoin pumps at the right time, when it's kind of isolated and there isn't a lot of news otherwise, that's when you'll really see the social volume bars take off. So it may just have not been noticed because other altcoins were also pumping, or REQ is just a little bit too obscure for most people.
Yeah, for sure.
Yeah. I'm checking some other data points for request. It seems interesting enough. If you look at like daily deposits and exchange inflow, just so we kind of look at the overall amount of potential sell side pressure on the coin, and zoom out to the last 3 months or something. Just so people can, So basically what you see here is what you'll see very often. And if you look at exchange inflow, it's the same picture. So currently we're looking at daily deposits for REC, basically the amount of addresses that are moving REQ to exchanges on a daily basis. So the idea of this metric is the more addresses that are moving REQ to exchanges, the more potential sell side pressure there is. And therefore, the more negative impact it might have on the price in the short term. So very often we see these spikes in daily deposits around local tops, which happened here for REQ. I guess that was its all-time high, and then we had another cluster of deposit spikes a bit later before the correction. But currently, it seems like the sort of exchange-related activity is declining. There seems to be sort of an exhausted sell-side pressure for the last couple of weeks. Less and less people are looking into dumping their bags. If you look at the total amount of REC being moved to exchanges, which is calculated by our exchange inflow metric, it's pretty much the same picture. Yeah.
Search doesn't always like me. I'll just do it manually.
Yeah. And I was also looking at the sort of network profit loss side of things. So, okay, let's start with the exchange inflow first.
I'll take off deposits.
Yeah, so you can kind of see the same thing, right? Once again, major spikes in exchange or in the amount of reg being moved to exchanges around the all-time high. Completely understandable, completely expected. Very soon afterward, we had a major correction, and then so far, relatively low sort of activity in terms of something.
Oh,
I'm just opening. Yeah, I'm opening the link while you're talking, Dino. Sorry, I'll go back to exchange inflow until you want to.
Okay, there we go. Yeah, it seems like also we had another spike right at the bottom for rec. So Brian, if you can show that latest dip for rec right there. Yeah, so it seems like right before it, we also had another sort of slight outlier in the amount of rec being moved to exchanges, which might have preceded that correction. It seems small, but it's the largest amount of rec being moved to exchanges since the all-time high right before the correction. So it definitely seems like somebody, one or two people, maybe one or two whales have sort of looked to exit the coin for the time being, and that's all it takes sometimes, right?
Yeah.
So especially with these low volume, low liquidity coins, it doesn't really take a whole lot of effort to dump it if you want. So yeah, another thing to keep in mind. But overall, if you look at its on-chain activity, there's about 150 daily active addresses for rec, which is not bad, honestly. Like a lot of people don't understand or don't realize that there's not a lot of coins on the Ethereum network that have more than 500 active addresses a day. And you know that there's probably like 40 coins that have more than 500 addresses a day. We're interacting with the coin, and then as far as rec, it's currently at about 100 to 150, which is fine for an up and coming coin. You know, I would definitely expect this number to grow if they're closely associated with Maker. So yeah, not looking bad. And if you look at network profit loss, which is sort of the metric that tries to calculate the periods at which people start taking more profits, right? So the way that this metric works is we take each unit of this coin, and we take the price at which it was last moved on the blockchain, and we assume that that was its acquisition price. And then the next time it moves on the blockchain, we assume that it was its sell price. And then the difference between those two numbers becomes this metric. So when you see a spike in network profit loss, the idea is that the coins that are moving on the blockchain at that point in time are moving at significant profit. So that's why, for example, you see a cluster, sort of a number of spikes in profit-taking spikes around the all-time high, and then we saw another sort of spike in network profit loss right there, sort of in the middle of the next rally, and then a slightly relatively small spike right there before the latest drop. So that's probably those couple of whales, yeah, right there, a couple of whales taking profits. Obviously, on a network-wide scale, that doesn't look all that much, but especially if you zoom out of these previous spikes, you'll see that it's relatively large, right? So overall, I think as long as, yeah, there we go. So overall, I think this also points to the fact that pretty much each of Rec's sort of rallies have kind of coincided with periods of elevated profit taking, which has kind of impacted the price in a negative way. Currently, we're not seeing a whole lot of people getting out of the coin. So as long as sort of exchange-related activity, profit-taking activity kind of chills out for a sec, and the general on-chain sort of activity on the network continues to rise, more addresses start interacting with the coin, more value becomes transacted on the network, I think Rec can be in a good position. But that's on a long stack. I suggest keeping an eye on these metrics, right?
I think that the big spike kind of shows me it happened around the price of the previous big spike. So to me, that's probably like either people that got in too high and then regretted it and then got out when it got back to when they got their money back, basically.
Yeah, could be.
Or people that had gotten earlier and thought they'd missed the boat the last time and they didn't want to miss it again, right? So that maybe... It seems like the price is roughly the same.
Mm-hmm. with REC being a relatively small asset too, it takes far fewer people than you would maybe initially expect to be able to have these types of big spikes too. So it could be, just a handful of people who decided that this was a polarizing price that they did not want to mess with.
Yeah.
So looking at this link you sent us here, Brad, what can you tell us?
So this is what they use to sort of say, this is why they're a good project, or this is like what they use to sort of, it's their main KPI, I guess, is what I'm trying to say. So it's showing the use of their network over time. And so more transactions happening, more invoices being paid, more people using it. And so this is sort of their thing to show that, things are going in the right direction. So I don't know if, do you guys ever take data like this and add it on to what you offer? Like, has there been a case where some coin got big enough that, I guess you mentioned you were going to add or thinking about adding Cardano, their entire chain, right? But is there something like in the ERC space where you take extra data?
Yep. So we've done it for Uniswap and Maker, for example.
Oh, okay.
Yeah, so if you go to Uniswap's project page or Maker's project page, you can see more information outside of just what we offer for pretty much every ERC20 coin. So you can, for example, see the CDP activity in Maker for a number of different coins, basically the number of closed liquidations, opens, a lot of different stuff. And then as far as Uniswap, we've also added a bunch of sort of information about how much Uniswap has been claimed, who are the top claimers, what they're doing when they're dumping coins, things like that. So yeah, when there's interest in a coin, we definitely try to incorporate more specific data outside of just sort of our general offering, right?
Yeah, this is really cool.
Yeah, lots of really cool dashboards here that you guys can take a look at. Since we're at about 42 minutes after the hour now, this would be a good time to transition to questions. And Dino, if you want to take over screen sharing, talk about anything you wanted to sort of note on before we got into it, now's a good time, I would say.
Sure. And thank you, Brad. Any sort of call to action for people? I guess check out r/altcoin.
Check out your project, right? Right, that's what the call's
there
about.
You go.
So, the Reddit. People find Reddit by itself. So, we don't need to do that. But I'm just super interested in all of this data. It's crazy. It's such an asset.
So yeah. I'm going to be talking about Ethereum because a lot of people mentioned that they are interested in ETH and what's been going on with it lately. But guys, if there's any other coins that you would like us to look into a bit more closely, I know we're already about 45 minutes into the hour. I know some of you are a bit tired, so I'm going to try and not harp onto Ethereum a lot so we can leave a bit more room for other altcoins that you guys would like us to look into, especially if they're sort of on Ethereum. We have the most data on those coins. I've seen, I think, 1 or 2 people asking about Binance coin as well. We can take a look into that as well. Just let me know in chat, all right? And we'll see what there's most interest about, and we'll jump into those coins. All right, so I want to talk about Ethereum. Last couple of days have been very interesting for ETH in terms of fundamentals, in terms of both on-chain data, social data, funding rate data. All of those kind of came together within a couple of hours, maybe within a couple of days, maybe 72 hours, to let us know that Ethereum is becoming a bit too hype for its own good, and it's probably going to lead to a short-term correction, and that's pretty much what happened. So we've already seen one of the more concerning signals for Ethereum. The funding rate, or the sort of average amount, the total amount of fees being used to fund the perpetual contracts on BitMEX, but also on other high-volume exchanges, was very high, suggesting that the derivative market was increasingly bullish, very sort of confident in Ethereum's long-term potential or mid-term potential. And in fact, it was even more bullish than the first time that Ethereum broke the all-time high during this rally. So if I zoom in here, you'll see that, sure, yeah, we had a massive spike in funding rate right around Ethereum's all-time high, but then we had another one, even stronger sort of move. And it was actually while Ethereum was slightly correcting to or retesting the 2K level. Once it bounced back, it seems like a lot of people were more, because this is the first time that Ethereum was able to bounce back off of the 2K level for in history. Like the last time it happened, we basically just had another sort of month-long correction. So it seems like a lot of people were waiting to see what Ethereum is going to do after it breaches all-time high. The first couple of bounces proved to be solid. So there was another sort of spike in funding rate suggesting that, all right, a lot of people are now very much confident in Ethereum's long-term potential. And then not just for Ethereum, but we've seen the same thing for Bitcoin. Both massive spikes in funding rate, the highest since the February all-time high. So it suggested to us that a lot of people were super bullish, and that's probably not going to bode well for the coin in the short term. Why? Because a lot of traders were over leveraging long. That means that there's very much incentive for people to short, squeeze out the longs, liquidate the long positions, and pocket the profits in the short term. So that's what happened, but that's not the only thing that we saw as far as Ethereum's sort of fundamentals are concerned. So I'm going to go back to social data and social volume in particular. So this here, we're looking at the amount of Ethereum related mentions on crypto related social media, right? And I'm going to actually take the 8-hour scale just to kind of reduce the noise a little bit. And actually, let's move the let's change the price from just line to candles so people can, if they enjoy candles more, can look at it that way. So what we have seen, very much unsurprisingly, is that there's been the biggest spike in Ethereum-related mentions on crypto social media right around the all-time high, the biggest spike since the previous all-time high, right? And if you follow these streams, if you, I changed the color of it for some reason. If you read any of our insights, you know that we generally believe that massive spikes in social volume, especially when they happen during rallies, suggest two things. Number one, it suggests that the crowd has become hyper aware of the rally and is becoming irrationally confident about the coin's price performance. So these spikes in mentions, these are not people being bearish on the coin. These are people shouting buy, pasting rocket emojis, fire emojis, all those types of things. So it's essentially sort of a visualization of the amount of market euphoria. So when it happens during a price rally, it suggests that the crowd is becoming sort of overzealous, and it suggests overvalued conditions. And the second thing it suggests is that pretty much everybody that has wanted to buy into this portion of the rally is already is already aware that the rally is happening. So there's going to be less of a strong buy side pressure in the near future, right? So that's why we see pretty much the same thing happening at around both Ethereum's all-time highs. We've done some backtests recently where we've tested this phenomenon on about 650 different coins. It pretty much came with the same results. So anytime we see massive spikes in social volume during price rallies, in the 2 weeks afterwards, we see a strong correction in the average price performance of the coin in question. So that was sort of another suggestion to us that we might see a slight cooling off period for Ethereum. And sure enough, it happened. But also one positive thing, similar to the funding rate for Ethereum, was that we are now seeing a normalization of Ethereum social volume, not just of Ethereum social volume, but also of Ethereum's funding rate, essentially letting us know that both the crowd and the derivative traders are now taking a backseat. They've kind of been shaken out by the sort of another breach of Ethereum below 2K. And for the time being, the general sentiment towards Ethereum seems to be moving away from overwhelmingly bullish back to sort of the neutral territory. And that's where we want to be. Ideally, we would even want to be into the bearish territory, but at least the market is no longer as overvalued as we were a few days ago. And then the next thing that I saw for Ethereum that kind of got me worried a little bit was this massive sort of spike, and actually a few spikes in network profit loss on Ethereum. So once again, this metric seems to, what it tries to do is it tries to calculate the average ROI of all transactions on the network. So these spikes in network profit loss suggest that on these points in time, all of the coins, Ethereum coins that were moving on the blockchain were moving at a significant profit, suggesting massive profit-taking capabilities, right? And this is, once again, similar to what we see for a lot of altcoins. Massive spikes in network profit loss around local tops suggest that people are exiting the coin for the time being and applying, a ridiculous amount of sell-side pressure. Now, one cool thing that we've noticed, if I zoom in here, is that for the first time in a while, there was also a dip into the negative territory for Ethereum's net worth profit loss metric. What this means is that at this point in time, right around the bottom, by the way, at this point in time, all of the coins that were moving on the blockchain were, on average, being moved at a relative loss. So basically, this seems to suggest that a lot of people were fighting out of Ethereum for the time being. Probably a lot of people that bought around 2K as well. And usually we think that this is a relatively good sign for the coin and can sort of mark local bottoms because it suggests oversold conditions. It suggests sort of the exact opposite of euphoria. It suggests a holder capitulation, exodus of weak hands, and probably a reallocation to stronger hands. If there's definitely has been a lot of buy side pressure around the dip. So these types of events where people are moving their bags at a significant loss suggest there's blood on the streets, and that's where you sometimes want to consider entering into a position. And if you look at the last month of data, it's pretty much the biggest drop in Ethereum's net profit loss, suggesting that indeed people were feeling the pain and they were not willing to wait until Ethereum went down to like 1.5K before they started exiting. They started exiting the moment that it broke the 2K barrier, right? So that was, even though these spikes in net profit loss suggested that indeed there was probably a rise in sell side pressure and people taking profits, this dip also marked the local bottom, which was good for the coin. For the time being, afterwards, we have seen a relatively dormant sort of activity of this particular metric, suggesting that, once again, people have kind of jumped the gun a little bit. Now we're back into a normalization period, a consolidation for a lot of these metrics, which should bode well for Ethereum. So one of my favorite metrics to look into as far as on-chain data is MVRV. So MVRV ratio is a very popular on-chain metric. I know a lot of people already here know what it is and how we use it. But for those that are maybe new to the stream, what MVRV ratio does is it attempts to calculate the average profit or the average loss of all holders, of all addresses that have acquired, in this case, Ethereum, within a certain time frame. So the 30-day MVRV ratio that we're looking at right now tracks the average profit or the average loss of all addresses that have acquired Ethereum in the previous 30 days. Currently, we're at about plus 8.19%, suggesting that short-term Ethereum traders are currently about plus 8% of their initial investment, right? So the way that people use this metric in general is the higher the MVRV gets, the more likely it is that people are going to start taking profits. First of all, the higher the MVRV gets, the more profits there are on the table, the more unclaimed profits there are by a specific group of traders. Here, we're currently looking at short-term traders, but we're going to be looking at long-term traders as well. So high MVRV means a lot of profits to be taken, basically a lot of potential sell-side pressure, and therefore increased risk of short-term correction because people are going to be starting to take these profits. So the way that you can kind of analyze where we are in a cycle is to look at historical data. So where are we currently as far as MVRV is concerned compared to historical MVRV trends? As you can see, Ethereum's MVRV, 30-day MVRV, tends to peak at, well, it tends to become some sort of unsustainable at pretty much like plus 25% and above. So anytime that Ethereum's 30-day MVRV ratio hits 25%, basically when the short-term holders are about a quarter up on their initial investment, anytime that happens, we see a short-term correction for the coin. And usually this was a sort of an outlier, but even then it only lasted for about 3 days before we had a massive like 30% correction on Ethereum. So currently we're nowhere near those levels, right? Basically the way you should read into this metric is if you are plus 8% up on your initial investment in Ethereum, if you bought Ethereum recently and you're plus 8% on whatever money you spent on it, how likely are you to get out of the coin currently, right? Probably not that likely. You're probably going to be, looking for higher profit margins before you start considering an exit position. So as far as Ethereum's long-term traders are concerned, we're looking at the 365-day MVRV ratio. Essentially what this metric shows is the average profit margin of all addresses that have acquired Ethereum in the previous 365 days. This is obviously much larger. They're currently at about plus 80% up on their initial investment. So there's definitely some amount of profit that can be taken off the table, applied, and if these long-term holders, veteran Ethereum holders, start taking profits, they can definitely tank the price in the short term. But once again, if we look at the sort of trends throughout this cycle, long-term holders seem to be more than content to see their sort of bags overflow a little bit more before they start taking profits. So both during the January and February all-time high, we've seen Ethereum's MVRV rise up to as high as 125 and 145%. Even at these local tops, it went up to about 100% before we saw a correction. So currently, both long-term and short-term MVRV for Ethereum suggest that there is a potential for further price appreciation. Doesn't mean that it's necessarily going to happen, because in general, I mean, we're also very much far away from local bottoms, both for 365-day and 30-day MVRV ratio. But there's, if the other fundamentals are strong enough, there's definitely more room for the price to grow before we can put them into the proverbial danger zone according to MVRV, right? And then one of the things that we've recently started playing around with, this is still not a part of the platform, is we've started trying to visualize sort of the evolution of supply of Ethereum and where it's going and where it's going away from. So this particular chart we've featured recently in one of our videos shows the amount of Ethereum that is being located on centralized exchanges, which is the orange line. And this other line, the blue line, shows the amount of Ethereum that is located in large DeFi-related projects. This is Maker, Compound, Aave, a number of the centralized exchanges that we track, and a few other projects. So it's not an exhaustive list of DeFi projects, but it's definitely sort of a good overview of the activity of the largest Ethereum-based DeFi protocols. So one thing that you can see is there's definitely been sort of an opposite trend in terms of these two charts. So the amount of Ethereum located on centralized exchanges a year ago was about it was about 26%. So basically 1/4 of Ethereum's total supply was located on exchanges, centralized exchanges, 1 year ago. Currently, that number is at about 19%. So people are moving away from centralized solutions into DeFi related protocols and DeFi related solutions, which should bode well for Ethereum as a network in general, I believe. So on the other hand, the percentage of Ethereum's total supply in DeFi went from about 2%, 2.06% a year ago, to about 9.5%. We're recalculating the data for the last couple of days, but a week ago it was about 9.5%. So that's also a massive amount of Ethereum's total supply moving to DeFi protocols and DEXs over the last year. So overall, sort of long-term trends, it definitely seems like more money is, or sort of more Ethereum is now being moved back into the ecosystem, which I think is going to increase the value of Ethereum in the long term if it continues. So it's one of the cool things that we've been working on recently that I wanted to showcase as well. So anyway, not to talk too much about it, because I've seen a few more coins being mentioned in the chat. We've seen several sort of concerning signals for Ethereum before the dump. We've seen massive spikes in social volume, suggesting market euphoria. We've seen spikes in funding rate, both for Bitcoin and Ethereum, suggesting that the derivative traders were very much bullish, which previously seemed to coincide with local corrections. And we've also seen strong profit-taking events on Ethereum, suggesting that a lot of people are starting to exit the coin for the time being, applying negative price pressure, all of which combined sort of coincided with the correction. All of these metrics in the past 24 to 48 hours have begun to normalize, although it's probably too early to call it. So I suggest keeping an eye on all of these metrics in the next 5 to 7 days, right? Ethereum's MVRV for the time being is sort of in the middle. It's not at a historic lows, it's not at historic highs. So, there's more room to grow, but at the same time, it's not out of the question that we see a sort of another correction happening. So it's sort of, I just wanted to kind of provide an overview of what we were seeing last couple of days as far as Ethereum is concerned. Okay, Brian, did you take a look at chat? What sort of coins are people interested in before we end the stream?
I've seen a few instances of Engine. I've seen BTT as well. Those are probably two good ones.
Oh, I am muted. Okay, interesting.
I thought you were just in deep thought.
No, sorry, I was yelling and nobody was there to hear me. I think let's start with Engine because we wrote about it yesterday. Gary, if you wanna share this this article, we wrote about 4 coins that got listed on Coinbase and what their price performance looked like, and also what their on-chain analytics looked like after the announcement. So as far as Engine in particular, I think it has some quite interesting patterns. So let's start with not the last day. Let's take the last 6 months. All right. So let's start with sort of the overall exchange-related activity for Engine, because obviously it's what's most important now that it's listed on Coinbase, right? So I'm just gonna take the price of Engine, put it here. There we go.
I'd seen people asking whether the price was already built in for things that get listed on Coinbase. So it seems like from a quick glance at that article that that it wasn't.
Yeah, I definitely think that it wasn't. I'm gonna as this loads, I'll show why I don't think that it wasn't. I think a lot of sort of on-chain activity came after the fact. After the announcement, suggesting that people were definitely not that the listing was not priced in appropriately beforehand, right? So let me show you what I mean.
I think that would be a great takeaway, from Santiment data, right? Like to think that on the announcement when Coinbase launches a new coin, it's still not too late.
Yeah, I mean, sometimes not to be around the bush. Sometimes the listing is going to tank down the price for sure. But in this case in particular, we've seen several sort of lagging indicators suggesting that the crowd wasn't necessarily super aware of the rally ahead of time. I mean, aware of the listing ahead of time. So okay, I'm showing the price of Engine on a 15-minute interval. Let's start with social volume. Just to kind of show you guys what happened. I messed something up. Let me just open another page because I messed something up while fixing the price interval, and it just sort of froze all of my other metrics. So let's look at Engine. Sorry guys, one sec. Okay, social volume. Here we go. All right, so this is what we saw for as far as Engine related mentions. We've seen obviously a sort of a massive spike around Engine's around the announcement, basically suggesting that people started talking about it a lot more than usual as Coinbase started listing it. Now, if you look into other sort of mentions or spikes and mentions of Engine, let me take a maybe 1 hour interval. Yeah, so 30 minutes. So the two, obviously these look smaller in comparison, but it's just because this massive outlier kind of skews or dwarfs all of the other data points. But the two biggest sort of outliers after the fact, if we discount this one, which also kind of coincided with the local top, this was sort of the first spike in another spike in social mentions for Engine, and then we had another sort of cluster of spikes right around Engine's latest all-time high and before the correction. Actually, if I zoom out of this spike, maybe we can see it a bit more clearly. Okay, one sec. So this is April's. Let's try April 8th. Yeah, there we go. Okay, good. So this is what Engine's social mentions looks like in the last what, like 48 hours. So definitely can see that the biggest spike in mentions came at the pretty much right at the all-time high before the correction started, suggesting that the market was becoming way too happy and euphoric for its own good. And in the short term, we're probably going to see the price of engine start to kind of consolidate or experience a negative downtrend. So you can see it here exactly at the top as well. And then another sort of spike right at the local or interim top before a correction. So usually, like I said, once you see these massive spikes in social volume, especially when they happen during price rallies, it usually indicates, at least in the short term, that we're going to see a potential for correction, right? Doesn't necessarily mean that engine can't make another leg up from here on out, but it certainly suggests that it was becoming a bit too popular for its own good. So looking at exchange inflow data, we can see similar behavior. So this is showing the amount of engine being moved to exchanges on a 30-minute interval. Let me move it to 1 hour just so we can kind of reduce the noise a little bit. And so similar to social mentions, the sort of several biggest spikes that we've seen was obviously after the first initial announcement where a lot of coins were being moved to Coinbase. We saw another sort of major spike in exchange inflow right here around the first sort of top before a correction. And then another massive spike in the amount of engine being moved to exchanges before engine started to correct it once again. We haven't really seen anything in terms of like sort of anything that would suggest like pre-pump positioning. A lot of people moving engine to exchanges beforehand. It basically just looks like another day at the office before the announcement. So I don't think, and we've also looked at whale behavior. There wasn't any like major changes in engine whales or the balances of large engine holders before the announcement. So it doesn't really seem like anybody was really front running this pump. It just seems to have happened after the fact. So these sort of massive spikes in exchange inflow are definitely concerning for the short term because it suggests that there's a lot of people looking to take advantage of the pump and sort of reduce their exposure, mitigate risk as the engine makes a new all-time high. Not very surprising that you saw both of our local tops for engine here as well as here being marked by these massive spikes in exchange inflow. What I would, if I'm into engine, if I maybe want to look into an entry position, what I would keep an eye on is this metric as well as social volume moving back down to normal levels sort of here, right? Suggesting that, you know, the sell wall is sort of declining. A lot of people are losing interest in the coin. You know, the coin is sort of starting to fly under the radar once again, because otherwise we're probably still going to be seeing another sort of another leg down potentially for the coin. And then if we see the number of deposits for engine, it's just, so this is a metric that gets updated once a day, but we're looking into adding a hourly interval as well. But you can see similar to engine's previous stops, right? Both here as well as here, there was, over the last couple of days, there was just a large spike in the number of addresses moving engine to exchanges, suggesting that similar to previous spikes, we're probably going to see elevated sell side pressure. And then if we look at network profit loss, yeah, I mean, what you see here is what you saw around its previous high as well. A lot of people taking major profits, massive spikes in net profit taking. And if we look at it here, the last one came right about the top, yeah, right about the engine's all-time high. But generally, you know, all of these suggest that coins are being moved to exchanges. It's not necessarily immediately going to tank down the price, but it does suggest that a larger sell wall is probably forming for the coin. So definitely have been, you know, a few sort of concerning signals for engine since the announcement. If we look at its 30-day MVRV, we also see that it's now the highest it's been since March 17th, basically its previous price bump. It's not where it used to be or where it was during its all-time high. So similar to Ethereum, I think we're sort of moving closer into the overvalued territory, but there is a potential for another leg up as far as MVRV is concerned. And if we look at the long-term MVRV engine traders, it's sort of the same thing. So we're inching closer to a previous high as far as people starting to take profits, but we're not there yet. So ideally, I would look for Engine's social and exchange metrics to come back to earth over the next couple of days, just to kind of let us know that for the time being the sell side pressure is declining. And from then on, if the fundamentals are still good, if the sort of total overall activity of the network continues to rise, we might see another. I mean, I can't say from this perspective, but I wouldn't be surprised to see another leg up, although nothing is guaranteed, right? So that's as far as some of the metrics that we can check out for Engine. I'm not going to go into whales because we're sort of running out of time, but go ahead, Brian. You wanted to mention something?
Yeah, Dino, it's worth mentioning that Engine can be used on SanR as well. People can make calls based on this polarizing area we're at right now, with it being at such a large recent rise over the past week.
Good points.
Yeah.
So that that dovetails into what I just wanted to mention at the end. So first of all, guys, if you liked anything that you saw currently or during this last hour of conversation, everything that we talked about is available on Sandbase, app.santiment.net. If you don't have an account, there's a 2-week trial where you get access to all of our metrics. You can test the platform for free for 2 weeks just to kind of see how powerful it is. Now, if you're sort of interested in testing your market acumen and market intelligence, right, and kind of trying to understand or to suggest to track where you think the market will be going, check out SanR. SanR is a side project that we've been working on. It's the first decentralized marketplace for signals for cryptocurrency prices. So essentially what that means is that you can create signals or sort of predictions of where you think the markets will be going next. These are my currently open positions. I 2 weeks ago suggested that Bitcoin was going to rise. I think I did it during the stream just to kind of showcase how this platform works. And then my current 0x prediction is kind of down, but I'll mention why it's down. 0x kind of screwed me over today with its surprise rally, right? But if you sort of want to play against and compete against other people in the sentiment community, see how other people are sort of reading the market, where they think the market is going to be going next. SanR is a great way to kind of get a community-driven view of where people think prices are going to go next. So if you look at all of my forecasts, I just wanted to show how 0x was looking. So here I made a signal that I thought that 0x was going to drop compared to Bitcoin, and it has been in a sort of decline for a while, but just today it made a massive spike. Good for 0x, bad for my prediction, right? Probably should have closed it sooner, but I've got a few more days for 0x prediction before my prediction runs out. So hopefully for my sake, 0x is going to be falling back down to earth. So check out SanR. If you want to sort of compete against other people in the sentiment community, if you want to see how other people are reading the market, and also if you want to reap rewards. So you can also stake a certain amount of SAN for each of your predictions and get into a bi-weekly reward pool where the most accurate predictions and the best performance get rewarded in SAN tokens. So if you think you are where the markets might be going next, you can also sort of add that's sort of a bit of skin in the game and participate and compete with other people. So once again, check out sanr.santiment.net for more information. I know we mention it every week, but just a reminder for those that might be new to the chat. And
now for Engine, do you make a call or not?
I mean, currently, yeah. I mean, I don't want to. First of all, during bull cycles, it's very unflattering to make top calls, because I've made it a few times in the past couple of months where I saw Bitcoin being overvalued according to a few indicators, and then it still pumped 20% before it eventually started to correct. So it's like we mentioned a lot of times during bull cycles, like fundamental metrics can lag a bit before they actually catch up to the coin's price action. So I mean, at these levels, I would probably, based on the amount of sell side pressure and amount of social volume, I would probably make a sunset signal or create a signal saying that engine is going to a little bit correct itself a little bit compared to BTC. We can open a forecast just for fun and see where it ends up next week. Let's see if I was right or engine proves me wrong. You know, I mean, Engine, Chiliz, Decentraland, all of these NFT related coins have been enjoying a lot of love over the past couple of months. So, you know, it's difficult to say where they're going to top, going to peak. But there's definitely a few concerning signals for Engine at the moment that, you know, if I was looking into entering into it, I would probably wait a bit before putting my money. But obviously, not financial advice. I'm just reading what the on-chain data is suggesting for Engine for the time being. So that's going to be it from me, Brian. Anything you want to mention before we end the call?
No, I think this was a really comprehensive call. Obviously, we had a great guest on today. I want to thank Brad for his contributions and giving his insights on the newly relaunched r/altcoin. I'm really excited to have more future calls with you and discuss further what are trending topics on that subreddit anytime you want to come on.
Absolutely. Thank you.
Of course.
I had one question before we go, if it's possible.
You bet.
What's your cutoff? I understand that there's about 1,500 coins tokens listed with Sandbase. I know CoinGecko lists like 6,500. So like, what's the cutoff? Like, is there what's the like bottom as far as
just total assets represented on Sandbase?
Yeah, I'm just saying, like, how do you guys decide where to cut it off and say, you know, they're just too small to really cover?
Yeah, I mean, we're adding new assets every week. I think we're up to, correct me if I'm wrong, Dino, in this 17 to 1,800 range in terms of total tokens we have listed. But that
awesome.
should probably continue to rise. It's basically, you know, as tokens are getting headlines and seeing major traction, we'll take a look at it and say, okay, this needs to be added here because the data is definitely needed from our community. So that's kind of how we do it. It's on a per asset basis.
Yeah, there's no real cutoff. We're adding new coins to it every week, especially if there's anything, you know, being launched on the Ethereum blockchain. It's really not a big deal for us to add on-chain data for new coins on that are using the ERC20 standard. So we scour the web similar to other people. We find new coins that are being launched, whether it's, you know, on Uniswap or whatever. And we add them to the platform on a weekly basis. So constantly we're going, like, I think in the last month alone, there's probably been around 100 or 100 plus new coins that we've added to the platform. And that number is just going to keep growing.
That's awesome.
Yeah.
It's a lot. I mean, the 1,800 is...
It is. So if you can look here, for example, if you check out our screener, which basically allows you to filter out filter out specific coins by some of our metrics. If we reset all of the filters, we see that currently we have exactly 1,940 assets, and that was about 1,700 a month ago. So, you know, 100, 240 coins being added in the last couple of months.
And I got to say, like, when I'm choosing my altcoin of the day or whatever, I mean, once you get to like 300, 400, 500 deep on CoinGecko, like you're getting into some, you know, uncharted territory, right? So going 1,800 deep, it's very deep, my friends. That's you know, like that's a long way down the list. So
agreed.
Congratulations.
And thank you for joining us, Brad. Really, really looking forward to altcoin sort of being restored to its former glory.
Absolutely. Thank you.
Yeah, you guys are doing a tremendous job. Last topic I want to bring up is our referral links, guys. Continue to use them. Obviously, any help you provide in spreading the word to your respective communities is greatly appreciated and really helps us grow and be able to continue to put on these calls for our growing audience here. Obviously, we, of course, monetarily provide incentivization as well, and we give anywhere from 25 to 35% of the subscription purchase of anyone that comes from your link. So feel free to share them away. Just go to your account settings in the top right, and you'll see a generate referral link button that you can share anywhere and everywhere. If you need any help with that, just DM us in Discord. We'll be more than happy to help.
By the way, I'm already plus 1.4% on my down prediction for Engine since we've been
Killing
talking.
it.
So yeah, killing it so far.
This is why he's the expert.
Cash out, cash out.
Cash. All right. So anyway, thank you guys. We're gonna be continuing our discussion on Discord. Thanks for everyone joining in and sticking by until the end. See you all in 7 days. Or if you want to talk to us sooner, then just check out our Discord. We've got a few trading channels where we talk about interesting charts that we find on a daily basis. So yeah, let's move our conversation over there.
Good deal, guys.
All right,
Have a
thank you,
good
guys.
weekend. Talk to you all soon.